A very good evening to all our mentorship traders. We are on the 26th of March 2021, Friday evening, 9 p.m. Indian Standard Time. As always, our live mentorship invest session. We'll talk about how did the markets fare this week, take a look at a few of the sectors, and then we'll move on to we'll discuss. I've got a list of suggested mutual funds that one can look to start building their portfolio. So I've got quite an exhaustive list. So we'll talk about that in tonight's latter half. But to start with the markets first, Nifty gave us the breakdown from this rising channel. As you can see this, the red channel that I have here, this is the daily chart of Nifty future. We got the first breakdown, which came down here, which found some supports from this tiny little gap. There was a rising gap here. Bounce back to the moving averages, not sustain, and we had quite a sharp sell-off after that. And now today, at the close, we've got a pretty smart bounce back from the market. The short-term trend is down. There is no doubt about it, and we should be a little careful. This move today that we found was quite surprising. Consider that it has, if you take a closer look, it has actually, opened and stayed above the high of yesterday, which was like really impressive opening, I can say. Looking at the weekly chart, one time frame higher will show you that the index is going through a 2-week correction, and in both the 2 weeks we have seen significant bounce back from the week's low, which is clearly reflected by the length of the lower shadow. If I align this properly, yes. So we had the mega breakout and complete follow through rally. We did have some divergences here, but that's not good enough because primarily this candlestick is fairly long. So what the markets will try to do is probably eat away 50% of it, which it has already done. And then if that's taken care of, then the full of this long candle. But as of now, the longer term charts are fairly strong. We are just going through a healthy correction, which is needed for the markets to create room. Weekly charts will start to create positive hidden divergences with RSI, which suggests that sooner or later it will definitely try to bounce back. One time frame lower, take a look at the 75-minute time frame and take a look over here, 75-minute time frame. Yeah, and do we clearly see the blue channel breakdown? And now we are in a falling channel because we have started to find negative hidden divergences on the 75-minute time frame. It's not a good sign. Levels to keep a close watch: 14,600, 750, 14,900, as you remember, acted really well as a sign of resistance. So we need, first and foremost, we need a break beyond this red channel. The blue channel can definitely give us resistances going ahead, but the bare minimum is a break above this red channel. Today's lows, which is close to 14,500, is an important level for a short-term support. Once that breaks down, then weakness will persist. We have a truncated week next week. Monday is a holiday, so today's global cues, Monday's global cues. With that, we are going to open Tuesday. It'll be interesting to observe whether the markets manages to rally further and sustain or not. I would suggest that it's better to stay a little cautiously bearish and wait out, and let's see whether the markets can sustain this bounce back or not. If it can't, then probably we are heading for further weakness. If it can, then of course that's definitely a good sign for the overall markets. Let me zoom out this daily chart. Let's take a look at the sectoral behavior. This is the stockcharts.com RRG charts that we generally look at. First and foremost, I'm going to drag this tail length down to 1 week so that we can scroll, we can sort pharma. Lagging, but the biggest gainer, not not very encouraging, just 1.9%. Nevertheless, some gains. Metals is there. Now, metals is in the leading quadrant. Rest, all the sectors were down. Media, if you remember, we've been talking about media in our mentorship trade morning sessions, is a weak sector and it fell the maximum, 6.5% down. The public sector enterprises, let's now sort in terms of tail and try and understand who's doing what. A lot of sectors are in the leading quadrant, starting with the PSU banks. It started to drop momentum. Metals is oscillating between leading and weakening, so it's not leaving the relative strength. So it will continue to be a buy on a dip sector. So is a small cap. The public sector enterprises over here has started to gain relative strength. Let's mark this. This can be a very interesting space going forward for a couple of weeks or months, because this guy picked up momentum, relative strength momentum, and now is moving towards the right, which means that it's gaining relative strength, which means it's going to perform better than the markets either on the upside or on the downside. So PSE stocks, definitely sector enterprises will be really interesting to keep a close watch on. Small cap and mid caps are always there in the lagging. This is the mid cap index oscillating between leading wings. So essentially this list, if I break it down to you, PSU banks, metals, public sector enterprises, and auto. These are the ones you can continue to look to buy on a dip because they are in the leading quadrant and they still have some relative strength. Energy is gaining momentum. So Reliance, oil marketing companies, ONGC, etc. Please, we need to keep a close watch on those, because if this flow continues, it will, from the improving quadrant, go to the leading. So we might definitely find a relative outperformance coming in from this space. Pharma is still weak. Media, we know, is definitely weak. Pharma is heading towards the end of the beginning of this quadrant, which means from here, what it can do is go vertically up, means gain momentum. Does not mean it has to go up, but probably it will not fall as much it has been recently. FMCG picked up quite a bit in terms of price, but it's still in the lagging quadrant. So is the consumption. And so is the IT. If you remember, IT from it's been in the weakening, it started to gain some momentum, but rather than going to leading, it has now come to the lagging quadrant. So this will be definitely interesting to keep a close watch, because IT tends to be a good substitute or a pocket of strength when the market cracks. Bank Nifty is losing relative momentum. So you can see it's coming down vertically down, which means that it's in the weakening quadrant, which does not necessarily mean it has to go to lagging, but this guy is not going to perform the way it did recently. Overall, I think we should do better for the long traders to focus on the PSU banks, the metal, the auto, the mid and small cap space, and energy, especially energy. Taking a look at the sectoral indices, charts of the sectoral indices. There you go. So oil and gas, I think I have named it here as, okay, this is trading view. So CNX energy, this is what we were looking at. A weekly perspective on the energy, we can see a mega breakout, a retest, a next move. So essentially this guy should be buy on a dip, and we should closely take a look at the energy stock. So today, rather than checking all the sectoral indices, I'll focus a little bit more time on the oil and gas space. And let's take a look at these shares. Now, ONGC is in an uptrend. It's oversold down here. You can see it has created a bullish harami doji kind of a pattern. So definite bounce back candidate. IOC is in a downtrend. HPCL is also in a short-term downtrend, and so I guess is BPCL. So IOC, BPCL, HPCL in terms of trend is not doing that great. They've been flat. They've slipped from the day's high today. Range bound, HPCL also completely flat, a doji. It's like a bullish harami doji kind of a pattern. Can give us a bounce back, but I think of the four stocks that we spoke right now, nothing much to take away. The weekly charts of ONGC, if you look at, is still relatively better. IOC, HP, and this is very difficult to take any call from these four. They look all very, very similar, and we can expect some short-term bounce back from them. Not very keen. Petronet is a weak counter. It has started to create divergences with RSI, so it will be a bounce back candidate. It has created a bullish Harami pattern. It's an inside bar. Big sell-off, so don't expect a huge big bounce back. It's going to be a shallow bounce back, but the bounce back will definitely be there once it takes out the high of 227.5. Reliance. What can I say? Not much to take away from this counter. It's at supports now. We saw that in 22nd Feb. It found good supports at 1995 again. Few days back. Now again today, this level seems to be important for the stock, and so can it give us a bounce? There is a divergence down here. It has created some kind of a, it's not exactly a beautiful Harami pattern, but nevertheless I think it'll try its best to give us a bounce next week. Maybe not. I'm not that sure about this, apart from the fact that I'm quite sure it's got very good supports at 1990. MGL stock flattish. I think IGL will probably give us very similar behavior. IGL seems to be weaker than MGL. Stay away from both of them. And then finally, Gas Authority of India Limited. So this behavior of the energy, which is improving and can go to leading, and if it does, if the market goes up, they will go up more than the market, and vice versa. But when we look at the individual stocks per se, we don't see anything really encouraging, except the fact that most of them are short-term bounce back candidates. So we'll consider this with a pinch of salt. We're not going to get carried away with this, but we can expect a short-term bounce back from these counters, which actually have created a nice inside bar, like Petronet we spoke about, can give us a short-term contrarian move. And ONGC, IOC, HP, and BPCL. Reliance is something we can just watch, ignore for some time. Apart from that, I think the markets are such, we should be a little careful. Squaring it off with the final call on the Nifty is we should stay cautiously bearish. The trend has reversed down after a long time. If you look at this chart, which is the daily time frame, and you look at my two moving averages, rarely have they crossed down. They had a minor cross down back in September 20, and before that it was Feb 20 and Jan 20. So these moving averages do not cross over that often, but when they do, they can lead to some serious weakness. So we're not going to get carried away with today's bounce back. We're not very bearish, but cautiously bearish. 14,900, of course, is a very important resistance to watch for. So we'll trade accordingly, and long trades, if you take them, keep them as short term as possible, and always make sure that your stops are in place if you're in a short trade, because downtrending markets are far more volatile than uptrending markets. Okay, we'll always keep that in mind, that when you're in a short trade, be double careful when it comes to placing your stop loss and targets. All right, so I'll wrap up our weekly discussion here, and we'll move on to discussing the portfolio that you can build using the list of mutual funds that I have